If you've ever Googled, what's the credit score that I need to buy a house, and landed on a number like 740 or 800, I need you to forget about that right now. That couldn't be further from correct. Today, I'm going to break down exactly which credit score you actually need to buy a home, what happens to your interest rate at each credit tier, and the simple three-step plan that I walk my own clients through every day when getting them ready to buy a home. Welcome back to Mortgage Story. My name is Scott. I'm a licensed mortgage broker, and this channel is where I break down real mortgage numbers so you can make confident decisions, whether you're buying your first home or your fifth investment property. No fluff, no sales pitch, just the real math. Let's get right into it. Here's the truth. There is no single qualifying, or let's call it a cutoff, credit score to buy a house. It depends entirely on the loan program to which you are applying, and we will go through each of them one by one. Above my shoulder here in quotes is a line that I repeatedly hear from potential homebuyers. And no, what you see here is not correct. You do not need a 700 credit score to buy a home. Have a look here. Starting with conventional loans. Most conventional loans need a 620. That's the baseline score that most lenders use, although your interest rate and PMI will improve a lot as you climb above that number. It's also worth noting that if you do in fact have a score in the low 600s, a conventional loan is probably not your best option. As for FHA loans, the FHA is the most forgiving when it comes to credit scores. With a 580 score, you can buy a home with as little as 3.5% down. And if your score is between 500 and 579, we can still fund you through the FHA, just with 10% down instead of 3.5%. For any veterans or active military out there, next up, we have VA loans. The VA actually doesn't set an official minimum credit score, but individual lenders overlay their own requirements, with many requiring a 580 to 620 and some as low as 500. When dealing with credit scores in the 500s, this is where us mortgage brokers come up big for our clients, because we know which lenders will fund a person with each individual credit profile. This isn't a cookie cutter business. And lastly, USDA loans. USDA loans are for homes being purchased in eligible rural and suburban areas. USDA lenders typically want a 640 to run through automated underwriting smoothly. So if 580 gets you in the door, why does everyone obsess over higher scores? Two words: rate and mortgage insurance. Take a look at the chart here on this slide. Each bar represents your combined monthly costs with your interest rate and PMI stacked together. Not a dollar figure, just a relative comparison so you can see the shape of it. The 620 bar is the tallest because at a score in the low 600s, you're paying the most for both your interest rate and your mortgage insurance. Move to a 680 and that bar drops about 20%. Lenders price you into a better rate tier and your PMI improves at the same time, so both costs come down together. Now at a 740 or above, you're down another 20%. And now you're paying close to half of what the 620 borrower would pay every single month for the exact same loan amount. And that snapshot is not a rounding error. On a $350,000 loan, the gap between a 620 and a 740 can mean real dollars every month and tens of thousands of dollars over the life of the loan. So the honest answer is you don't need a perfect score to buy. 580 or 620 gets you in the door. But every point above the minimum is money back in your pocket each month. Before we get into the credit score fix, you need to know what you're actually fixing. Your credit score boils down to 5 factors, and they are not weighted equally. Your payment history is 35%, the single biggest lever. Amounts owed is 30%, how much of your available credit you're actually using. Together, those two are 65% of your entire score. Length of credit history is 15%, new credit is 10%, and the credit mix is 10%. So when we talk about boosting your score, we're really talking about moving the needle on those first two, your payment history and account balances. That's where the real leverage is. If your score isn't where it needs to be, or you just want to climb into a better rate tier before you shop for a home, this is the exact 3-step framework I walk clients through. I call it the credit score blueprint: monitor, repair, and boost. Step 1 is to monitor your report. You can't fix what you can't see. Step 1 means pulling your real scores and reports, not an app estimate, through a monitoring service so you know exactly where you stand and what's dragging your number down. Step 2 is repair. If your report has errors, old collections, or disputes worth challenging, this is where a credit repair service does the heavy lifting, professionally disputing inaccurate items so your report reflects reality. And lastly, step 3 is boost. Once your report is clean, it's about strategic moves, paying down revolving balances, timing your new account opens, and tracking your credit score specifically. In the description of this video, I have included links to companies that my clients and I have successfully monitored and boosted credit with. And for basic memberships, they are free. They provide some great tools for free credit monitoring and score building gadgets. To be transparent, some are affiliate links that help support our channel. Mortgage Story may get a small commission for any paid services that you purchase at no additional cost to you. One more thing before we wrap the blueprint up. This part is critical if you're already under contract. You can do everything right to get your score up and then torpedo it in the final stretch. Here are the 5 mistakes that I see most. Don't open a new credit card or loan or finance a big purchase, such as furniture, appliances, a car, even if the store offers 0% financing or a holiday sale. Don't close old accounts to clean up your file. Don't miss or make a late payment, even a small one. And lastly, do not co-sign on anyone else's loan. Any one of these can move your score enough to change your rate, or in a worst case scenario, cost you the loan and home entirely. I had a client, we'll call him Marvin, who came to me with a 561 credit score. He thought homeownership was years away. We ran the blueprint, monitored his report, disputed 2 old collection errors, and paid down 2 credit cards strategically. 14 weeks later, he crossed 610, qualified for an FHA loan, and closed on his first home with 3.5% down. 14 weeks. That's the timeline we're talking about here, not years. As we begin to wrap things up, let's knock out the 3 questions I get asked the most. Does checking my credit score hurt it? No, pulling credit is healthy. What hurts it is pulling it 5 to 10 times over 1 to 3 months. And even when you say apply for a new credit card, even if your score does get affected, it's just for a short time. The next question is, how fast can my score actually change? Real, meaningful movement is possible in 30 to 60 days with focused disputes and paydowns. And finally, does each company pull the same score? No, mortgage lenders use different scoring models than the ones your credit card apps show you, or other free monitoring services. Credit monitoring tools are great assets and everyone should use them. While they do point you in the right direction, they are by no means official credit reports. Often the mortgage industry models that we are required to use are more strict, as you could imagine, since in our industry, we are dealing with transactions in the hundreds of thousands of dollars. So here's your takeaway. You don't need a 700 credit score to buy a house. You need the right number for the right loan and a plan to get there. If you want to know exactly where your score stands and what loan you'd qualify for today, book a free discovery call with me using the link in the description. It's a real conversation, no pressure, no obligation. In 10 to 15 minutes, I can put you on a real path to homeownership. If you found some value in today's episode, I'll kindly ask 2 things of you to help Mortgage Story grow. Like this video and subscribe to my channel. There's a lot more to come and a lot more to learn. And if you're sitting there thinking, you know what, I think I am ready to make a move, book a free call with me now. The link is in the description. In 10 to 15 minutes, I can look at your actual numbers, tell you exactly which programs you qualify for, and give you a clear, honest path forward. No pressure, no pitch, just real answers about your real situation. So to wrap things up for today, every home has a story, and I'm here to help you write it. So from wherever you are tuning in from across the USA, good afternoon, good evening, and good night. My name is Scott, this is Mortgage Story, and I'll see you in the next one.